Hello, everybody. Again, welcome back. This to myatthemoneymachine.com. My name is Joey. I'm the founder and creator of myatmm.com. And just to get this out of the way, this is the disclaimer. This is not investment advice. I am doing this for entertainment and education purposes only, showing you how to use the web application myatthemoneymachine.com. So now that's out of the way, we can move on to our follow-up for the weekly options that we traded yesterday or put in the order yesterday. And let's go ahead and get to it. I've already taken the opportunity to go to Robinhood and go to the account history. Again, I'm using this Robinhood transaction history downloader tool to help with that, and I'm not going to go to it right now. Let's get rid of that. But anyway, you go to your history, you navigate and get all the transactions in the window that you want to, that you're interested in. Then you click download CSV, and that'll download all the transactions for you. Get them into a nice, easy to use format. And so as you can see, I got this as the transactions. I've already got it sorted, so it's ready to go. So let's go ahead and get to it. The first one that executed that we have in here is grab. So we have grab. So let's go over to the myatmm and go to the cost basis for it. Go to grab. Okay. And this is a new position. And it is a 250 put. Expires December 16th. So sell to open, put, did we do one contract? To put, yeah, it's one contract. And we said December 16th, I believe. So yeah, this one I had to take it out 3 weeks to get any money on there, and it was for a nickel. The strike price was, what was it? 250, yep. And the price was a nickel. So we got $5 on that. Yep. Okay. It saved, moved it down here. We're going to prep that into our transaction saver, and we're going to retain that. So that position has been recorded. Let's go back to here. So this one is done. So we delete that. Next one was a 350 call. We did 2 of these contracts. So another position, sold to open. A call, 2 contracts. What was the expiration? Again, December 16th. We had to go out to December 16th to get any money on this one. Okay, so December 16th. What was the strike? 350. And so that puts us right above there. So let's see what we can do here. 350. 2 of them at a nickel each. Okay. So we got 10 on that. So save and move it down to retain it. Okay. All right. So that has been recorded as well. Okay. Next up is MO. So we'll move over to MO. And I believe we sold a call, 45.50 call. We did 1 contract, 45.50. What's the expiration? 12/2, and is for 14 cents. So this one just went out to this Friday for 14 cents. Oops. All right, move that down, and we will save that. Okay. Not a big week for premiums. Well, I mean, it looks like we got a little over 100, maybe 200 in premiums this week, so that's not bad. All right, so NVAX, our favorite stock. NVAX. All right, and we had 2 new positions opened. So let's go ahead and get those on the table here. First one was a 1650 put for December 2nd. December 2nd, right? Did I got that right? December 2nd, 1650 put. 1650 put for 50 cents. Okay, 0.5, that's 50 bucks. Just double check that. 1650 put 12.2. Yep, we're good there. So let's go ahead and move that one down and save it. And then this other position we got into, let's go ahead and delete that. $28 call for December 16th. December 16th. Let's get 3 weeks out. We did we do 2 or 3 contracts on that? We did 3 contracts. And the strike price was $28 and it was a dime a piece. Whoops. Yeah. Okay, hold on. $28, yep. 28, a dime a piece. Just double checking my numbers here. Yep, we got 30 for that. So move the 30 down, save. All right. So that's all the positions retained on that one. I do want to kind of review this one and just look at it. So our cost basis without premium has been brought down to $28. So we are selling a call at $28. So that is slightly less than that. But I mean, I kind of took the half and half with the fact that our cost basis with premium is so low. So I'm kind of giving up the $26 per contract as a win. So because if it comes back up to 28, we'll be golden anyway. So in any case, all right. So we'll move on to the next one. So NVAX is down. All right. So now we're over to RUM. RUM, we have a $12 call for December 9th. We've got two, let's go and get these 2 new positions prepped. Did I say that was December 9th? Let's go back. So December 9th, $12 call. December 9th, $12 call. And we did 2 contracts. And we did them for 7 cents each. All right, so it's 14. $12 call. $12 call, December 9th, 2 contracts. Yep, okay. Let's go and save that. Retain it. Save it. Alright, what's the other one that we got going on? Let's go and get that out of the way. Alright, so this is RUM. Oh, I should have read it. December 2nd, $9. What was it? A put. Did I say December 2nd? And I think it was $9, right? So $9 December 2nd put. $9 December 2nd put. We did 1 contract. We did it for 40 cents. So $40. Move that down. Click save. All right. So there we are on this one. Cost basis with premium is down to $8.23. Now, there is something I forgot to do, isn't there? I forgot to account for the collateral and the shares on the puts that I did. So the question now is, well, how many puts did I do? I know I did one on RUM. Let's backtrack these things. All right, so let me just get rid of all the calls. See, I forgot to do this. I forgot to do this. Okay, so let's just start off with the one that we're setting on. So we're setting on RUM, and we did a put right here, one contract for $9. So that takes us up to 400 and is $9, so 900 is the collateral that we got going on here. Yep, okay. So we need to save that. So really the cost base is 842. And we took it down to 1125 now, so that's good. Okay, all right, so now RUM is done. We need to go back to NVAX, and we got one put here for 1650. So this will take it up to 400 shares. 1650 is $1,650, right? Yes. Okay, and we need to make sure we save that. So now, yeah, $25. See, so we're with the plan to both sides, putting the puts down to pull our cost basis down. Now we'd be down to 25 if this stays down below 1650 a share. If it stays below that, we will pull our cost basis down to 25 bucks. So we're making progress on this one. Still obviously haven't gotten out of it, but we are collecting premium the entire time while we're doing this. So all it has to do is bounce, and the lower we pull this down, it doesn't have to bounce much higher. The further down we pull this price right here, the less it has to bounce for us to get out of it at this price and then pocket all of this. So okay, so that was NVAX. We accounted for that. Now we need to go back to grab. Grabs right here. All right. So we have this one put, so that brings us up to 300 shares. The one put was at 250, so that's $250 collateral. Click save. So I think we're looking good on this one too, because it pulls our cost basis down to lower than $3. And we're selling calls at 350. So theoretically, if the price, I don't remember what the price is down to on this one, but if it's down at $3, then we can get more premium, obviously, because we can safely sell at $3. And this one, I believe, is a stock that we were okay with breaking even or breaking a little positive just to get out of it. So good deal there. Okay, so I'm done recording all the transactions. So we're basically done for this follow-up for the weekly. I do like to go back to the dashboard and just look at the overall picture of what we're doing. We're still overall down negative 1,400, and this is primarily from NVAX falling so much. But like I said, we are working on a plan that will correct this. We just need time, and we have time, so that will be fine, I believe, in the long run. So as you can see, it stayed around 1660 today. So we're not below that 1650 put we have on it, so that one won't fire. And I mean, I'm okay with it just staying there, because if it stays there and it doesn't go any further down, and it just hovers a little higher or just fluctuates there, then we can continue to sell puts right there at that price and continue collecting premium basically for free while we're waiting for it to decide where to go, and we can just sit on it. So we're okay with that. And the more premium I collect, the lower the price will go for the cost basis. Granted, that's the cost basis with the premium. That's this number. That number will continue to go down if we collect premium. This number will not go down unless if we actually purchase some down here. Then it'll pull that number down. But at some point, you'll collect enough premium to where the cost basis with premium is 0. So you basically effectively own the stock for free if you include the premium that you've collected on it the entire time. And then at that point, you can actually start playing games and pull this number down to a premium to where you're basically collecting the full premium at the money as a put right below it, and you could play the other side and put it right at the money above and be collecting the two largest premiums. And you would almost definitely get out of the stock one way or the other at that point. So either way, we're good with that plan. All right. So according to this, we're not using 8% of our, oh, according to this, we're using more than we have. And sometimes those numbers play out that way in this if things weren't calculated correctly, or sometimes the option price in Robinhood is fluctuated weirdly. So sometimes the math can work out this way, and you got to go kind of track down what happened. And it is possible maybe I didn't take off some of the collateral that I should have. Yeah, see, look at this. Rig. I don't think we're in rig anymore. And I have $800 collateral there. So that's what's going on there. So let's go clean that up. I'm almost certain I don't have any positions in rig anymore. So let's come through here. Just looking for position. We're just looking for positions in play right now. All right, so Clove has several. It has 2 puts. Expires this Friday, so that should be $200, and that's there. That's right. Nothing here. Keep on going. Grab has a put. That's represented. That's okay. I'm pretty sure it's just that rig. So MO is okay. Yeah, MO don't have no collateral. Okay, we're all right there. So this is wrong, isn't it? Yeah, because we have 200 shares, 2 call contracts, but there is no put for MVIS. Let's just go back to Robinhood and double check. So do we? Oh wait, we do have an MVIS right here. $4 call, but that's the call, and we have that here. So that's okay. We're looking for MVIS put. We don't. We just have the call. Okay, so this is a mistake. So 200. We only have 200 shares, and there's 0 collateral. So click Save. So that percentage use is a good way to make sure that some of your numbers aren't right, and you can always look at that dashboard to see what you have positioned, and you know you do, and where the discrepancy was. So obviously we found this one, so we removed that, so we're good there. So let's keep on going through the rest of them. NVAX, we know we have stuff here. We have 1 put, 1650, so that's accounted for, so that's okay. Rig, this one we do not, almost certain. So do we have a position in rig? No, we do not have a position in rig. Okay, so that one is false. So this is 0 and 0, and we can click Save here. Okay, moving on. RUM, we have that 1 put for 900. And it's the 400, 900. Yep, we're good there. Nothing here, nothing here. And I think that's it. Yeah, okay, so we're good now. Now let's see what the dashboard is showing us. Okay, so my thing about the math being wrong, I should have known with -8%, that was way too high of a number for that to be okay. So there we go. I knew the number. I knew I had used down to my buying power of like $50. So I'd used almost all of my capital. So that's cool. So yeah, that's a more accurate thing. So we are not using 0.21% of our entire portfolio, which is fine. I'm completely okay with that not working at the time. And the funny thing about it is it actually is still technically working, because right now Robinhood is paying 3.75% on whatever you have setting in your brokerage account. So yeah, as you can see, this number is always lagging like a couple days behind. It shows a couple days ago, but as you can see, the interest rate, it's earning 3.75%, which is really high considering, this number used to be 0.25%, and that's for doing nothing. All the money has to do is just sit there. I mean, it could just sit there and you not invest in anything and it'd make 3.75%. So that's cool with me. All right. Okay, so we've looked over all of these. Just looking through the numbers here. Rig, we are really just playing the puts on those things a week or two ago just to bring this number down and move it, try and flip it to the green, and then probably ignore it for the rest of the time. We were trying to do that with all of these low-hanging ones here. I will say that there's 2 stocks that I would like to get back into if I can ever get these down, the RUMs, and if I can ever get out of MO, which we have the call on MO at 45.50 and it's up to 45.10. So if it moves up to 45.50 by Friday, and we get called out of it, we can get out of that one and be positive overall. Be positive overall. So this over here should have a positive number in green, and it'll be one of my greens. And then that one, since the premiums aren't paying a lot for the capital involved, I probably won't mess with it anymore after that, and call it a day on that one. But there were some smaller stocks that I would love to get back into if I could. One of them being Fubo and Tilray. Yeah, Fubo and Tilray, I would love to get back into those because I was doing pretty good on those because they're low price stocks, but they're paying good amounts of premium on the put and the call side on a regular basis. And Tilray, for one, I'm not sure about Fubo, but Tilray is a high volume option traded stock. So those are two that I would like to get back into at some point. I would get back into Big too, BBIG. I would get back into that one because that one was paying really well. However, it got down too low to where it was too risky in my mind to play both sides because, like I said, the only lower put that you can go right here is 50 cent. And then past that, it's 0. So there is no put play side there. Like I said before, I like to play both sides as much as possible. So once it gets down to that price range, it doesn't make much sense to me. So anyway, those two, if I get out of MO, I'll probably be moving into these two again. And still trying to throw maybe a put on some of these lower ones again, just to get them out of the red, just because it's everybody would love to see green all across the board. That's like everybody strives to do that. And if I can, I'll try to do it. If not, that's fine. They can sit there and I'll find some other way to make premium. So anyway, let's go ahead and go to this because today was the last Monday for the month of November. So time to find out what I've collected for November in premium. So there we go. I've collected $1,700 in premium for November. So it looks like we're, starting to average somewhere around the 1,500 a month neighborhood. Average around the 1,500 neighborhood. So I've been hitting that pretty regularly for the past 3 months. These 2 months was just getting started on this portfolio. So was waiting to build up, some capital to actually start messing with. But in any case, so yeah, we're averaging about 1,500. And as soon as I stopped targeting the cost basis with premium, because I was targeting that for a long time, and it got me basically breaking even on my overall. I was basically hitting 0 or negative a little bit, and then it'd go over into the green a little bit, and then it'd jump back down to the negative. It wasn't consistently staying on the green side because I was targeting the wrong number. But like I said, we've corrected that now. We are focused on the cost basis without premium. We're focusing on that one. And then that way, all the premium we collect should be just pocketed, which is kind of the whole point for this style of investing or this strategy. So anyway, that was the follow-up for the week. Hope you enjoyed it. If you have any questions, just comment. Always feel free to send me an email. And as always, you can always come out to this site, myatthemoneymachine.com or myatmm.com, and sign up for your free account. You can sign up for a free account, use this freely. You can only track up to 3 on the free account, 3 stock symbols. You can manage 3 of those as much as you want. We do have a covered call analysis screen, which I will get into at some point down the road. This screen is highly used for basically when I'm ready to look for a new stock to start buying stocks and or puts and calls on. When I'm starting to get a new stock into the mix, I start using this tool more so to do that. It helps with analysis quite a bit. Right now I'm only tracking 26 stocks, but you can add more stocks here. On the free account, you can only track up to 10 as much as you want. Just track up to 10. And we, of course, have a membership that you can sign up for, and then you can do unlimited for the cost basis and for the covered call analysis screens. So in any case, like I said, just sign up for your free account, see if you like it, see if you don't. If you do, great. If you don't, no harm done. Other than that, have a good day, and I will talk to you guys later.